Vice President, Blue Line Futures in the Windy City, Oliver Slope. All right, Oliver. Looking at corn, we also had the Commitment of Traders report that came out, right?
We did have the Commitment of Traders report out last Friday. There wasn't a whole lot of change there, and I don't really expect a whole lot here going forward. I think what a lot of people are focused on now that we're past last week's USDA report is the weather going forward and then crop conditions, which we'll get later this afternoon. I think today's close is going to be pretty interesting. If you look back over the last 2 months, the trend has been lower on Mondays. The last 7 consecutive Mondays, we've seen the corn market close lower, that on the back of weekend weather being kind of benign and non-threatening. But if we can close higher and break that trend of lower Mondays, potentially that's a sign that maybe the shorts really aren't pricing in any risk premium at all, which is kind of what it seems like. As you and I talked last Friday, following that WASDE report, that it was actually a friendly report, and the fact that the funds just decided to sell it right out of the gates was a little bit of a head scratcher. But here we are kind of holding ground and firming up a little bit. So hopefully we can see some actual follow through on top of that through the rest of the week.
And then we get over to the beans. What are you watching there?
That November contract, below that psychologically significant $10 level. It tested and held that spike low from March, which was $9.96, and we're starting to try to stabilize above that. That's what we define as kind of a must-hold pocket. A break and close below $10 and that $9.96 level really opens the door for some continued selling pressure. And talking about the fund positioning in corn, we look at soybeans, where funds have been really just kind of on the fence, not overly aggressive long or short. They haven't established a net long or net short position outside of 50,000 contracts. So if they do decide to press the pedal to the metal, there is air below 996. You'd have to go back to those December lows, and then the April lows, that's 961 to 971. So hopefully we can start to get some sort of weather premium or premium in general built into this market to help us kind of avoid that worst case scenario that we're kind of on the edge of right now.
Okay, so I started with contract close in the corn market. Let's come back and talk about a market that's not just hitting contract highs, but all-time highs. Market day report continues in a moment. Let's bring in Oliver Slope, Blue Line Futures, and can we pull anything from where we are, and are there any trends developing that could be kind of seasonal trends, if you would?
Well, yeah, I would just follow up on that note that you made. A $4 move, it seems like a lot. A $4 move from, $3.25 is not the same as a $4 move from $1.40 like we're used to on a percentage basis, though it is a lot of money and risk flying around, which I think is significantly kind of highlights the importance of hedgers having some protection on underneath us ahead of what we see as a seasonally weak time of year. If you look out to that November contract, historically, looking at price averages over the last 5, 10, 20, and 30 years, that November feeder cattle contract tends to mark a seasonal high in the back half of July, and you see that weakness is really pronounced through the next couple of months. So if you need some protection and don't have anything on right now, I think it's probably pretty prudent to at least have some peace of mind going into what's a seasonally weaker time of year, especially with the volatility and the price swings that we're seeing.
All right, before we go, how about the hog trade? Are you watching this?
Lean hogs continue to see long liquidation there from funds who had been net buyers for, almost 2.5 months straight. Break and close below 104, 105 is kind of accelerated the selling here this morning. The next downside objective, 101 to 102. So I do think there's probably a little bit more pressure to come. 100, that's going to be a psychologically significant inflection point for the market going forward.
All right. Oliver Slope is with Blue Line Futures. We'll see you back here soon. All right, one more.